I'll show you the best way to invest the TSP in 2022 with advice from Warren Buffett, Dave Ramsey, and several other money geniuses. Specifically, I'll go over 5 TSP investment allocations for you to choose from, what percentage of what fund recommended by the best investors in the world, what changes to make in 2022, including common TSP mistakes that cost you big money if not caught, protecting your TSP balance using bonds. You're going to finish this video with the confidence to invest in the TSP correctly for your situation. Let's start with 5 different asset allocation strategies. Here's the ones I'll cover: the S&P 500 index, the total stock market index, Warren Buffett TSP investment advice, Dave Ramsey investment advice, and the most popular, my allocation strategy. Let's dive in. The S&P 500 index, the asset allocation I used for most of my adult life. The idea of investing simply in the S&P 500 index fund as a strategy comes from a letter from none other than Warren Buffett to his shareholders in 2013. Slightly paraphrased, the goal of the non-professional should not be to pick winners, but should rather be to own a cross-section of businesses that in the aggregate are bound to do well. A low-cost S&P 500 index fund will achieve this goal. If it's good enough for my buddy Warren, it's good enough for me. The C fund in the TSP mimics the S&P 500 index, so all you need is 100% C fund to accomplish this. Next is the total stock market index fund. This investment choice is a popular one and is the main recommendation of J.L. Collins in his book, The Simple Path to Wealth. This is the best finance book out there so far, next to the book I have yet to write. Instead of just investing in the largest companies that make up the S&P 500, you invest in those plus medium and small companies. This index encompasses the entire US stock market, just like the name says. It's more diversified than the S&P 500, albeit with more risk. The S fund is an index of small and mid-sized companies not included in the S&P 500 index. Therefore, a mix of 80% C and 20% S will closely mimic the total stock market index fund. Next, the Warren Buffett TSP allocation. While I mentioned earlier I got my idea for an all S&P 500 index allocation from something Warren Buffett said in his newsletter, he actually has more specific instructions on how his wealth will be invested for his family once he passes away. He plans to invest it in an S&P 500 index fund, no surprise, but he also plans to have 10% bonds. The reason for this is the amount of bonds you add to your investment will lower the risk in a down market. In the same 2013 newsletter, he states, "My advice to the trustee could not be more simple. Put 10% of the cash in short-term government bonds and 90% in a very low-cost S&P 500 index fund. As luck would have it, the TSP F fund is comprised of bonds. You can mimic the strategy for Warren Buffett's trust with 90% C fund, 10% F fund. Thanks, Warren." Next is Dave Ramsey's TSP investment advice. I'm a huge fan of Dave's book, The Total Money Makeover. His baby steps are legendary for getting out of debt. He also has TSP investment recommendations. His caveats are typical of Dave's approach to money. He suggests that you first pay off all your debts besides your primary residence and have an emergency fund of 3 to 6 months of expenses. I have a video that is my critique of Dave's baby steps. Click above to pull it up. I'll also link to it at the end of the video. Dave Ramsey uses an international fund in his recommendations. Luckily, the TSP's I fund is an international stock index investment fund. He actually has 2 sets of recommendation. His more conservative TSP allocation recommendation is 80% C, 10% S, 10% I fund. Less conservative, 60% C, 20% S, 20% I fund. Thanks, Dave. Now for what most of my friends describe as the quote, best investment strategy in the world so far. And until now, nobody has ever known how one of the most brilliant minds of our time invests his TSP. I like the idea of being a little bit heavier weighted on small and mid-sized companies as opposed to just being all S&P 500 index. I could accomplish this with the total stock market index, but I wanted even more exposure to small companies. I'm not a fan of TSP's international fund, and I have not been investing in it. It doesn't have enough exposure to small and or developing countries. So here's what I settled on. The Rich on Money Worldwide Dominance TSP portfolio is 50% S, 50% C. I know, I should be charging a lot for revealing my personal portfolio, but I just have too much love and altruism in my heart and no one watches my videos. Don't stress about picking the right one of these investment strategies. It's probably mine anyway. Any of these asset allocations will do far better than most people do with professional management. Now for the changes you should make in your portfolio in 2022. Pick a strategy and don't change it. My investment recommendations do not change year to year. Hear me out. The biggest investment mistake people make with retirement investing is tailoring their strategy year to year based on current events. This causes you to make far less money than you would if you stuck with the same strategy through thick and thin and global pandemics. Don't make these fatal mistakes in your TSP. Changing allocations each year, timing the market, playing with TSP charts, selling before or after elections, buying on dips, selling on bad news, etc. You will lose with these strategies, and if I see you do it, I'm going to laugh at you. Instead, use the advice of this damn video to make an informed decision about the best long-term TSP strategy for you. What you can change in your TSP portfolio year to year is your exposure to risk. I made a separate video about this, should be a card up here, which is deep in the weeds, but I will explain it quickly right now. Many people invest in 100% stocks. When I say stocks, that includes mutual funds and index funds. We often don't have any fixed income, bonds and treasury bills in our portfolio as a hedge against market risk. Bonds and treasury bills are safe. They don't go up and down with the stock market. It is wise to put a specific percentage of fixed income, which is bonds or treasury bills, into your portfolio of stocks to lower the market risk as you near retirement. For the TSP, stocks are C, S, and I fund, and fixed income is G fund treasuries and F fund bonds. Here's a quick example of how to use bonds to protect your TSP. If you have 50% or half of your portfolio in stocks and the other half in bonds, F fund in this case, when the market suddenly drops, let's say 30% in one day, you'll only drop about half of that, or 15% or so, because you're only half invested in stocks. The bonds you have won't lose value. That limits your downside. Here's the problem. If the market shoots up 30% in one day, you only go up half of that, or 15%, because you are half invested in stocks. It's a double-edged sword, but smart to do this as you get older and have a growing need to preserve your portfolio. Here are some simple guidelines for achieving the right balance of stocks to bonds for your age and risk tolerance. I use the law of 120. When it comes to the percentage of your portfolio that should be in stocks, you subtract your age from 120. A 30-year-old would be 120 minus 30 equals 90% stocks, so you need 10% bonds, which means 10% F fund. A 50-year-old would be 120 minus 50 equals 70% invested in stocks, 30% bonds. Some people use the law of 100 instead of 120. You can adjust this number based on how risk averse you are. Here are some questions you could ask yourself and decide between 100 more conservative or 120 less conservative. Do I have a higher or lower risk tolerance than other investors in my age group? Is this my only source of income in retirement? Do I have a pension, real estate, a sugar mama, or other income as my supplement? Now you can confidently invest in the TSP. You know what you should and shouldn't change in 2022. You understand how to shift your portfolio to a safer mix of stocks and bonds as you approach needing that money. Question to you: what is your asset allocation and are you using bonds? I'm actually not using them yet. Let me know in the comments. This is Rich on Money. Here's a spot to subscribe to me because I'm awesome. Here's 2 other videos you could watch next if you want to just binge amazing advice like most people do. Rich on Money, signing off.